despite the fact that there's a war raging in a major energy producer and energy prices writ large are really high and global inflation is high. Now, some people are, of course, well, I shouldn't say some people, a lot of people are, of course, latching this onto what their favorite drum is to beat at the moment. Some people on Twitter have said that, of course, they're doing this to stick it to, quote, my boy Biden. And, my boy Biden, ew, no. Far more important is that OPEC is nowhere near their production quota. In fact, as recently as August, they were about 2.8 million barrels a day below it. So if they cut their quota by 2 million barrels a day, that actually means they might increase output. So, number one, let's wait to see what happens here. The problem here is that if you are outside of the Persian Gulf, OPEC members, so Kuwait, United Arab Emirates, and Saudi Arabia, everyone else has just been in this investment bomb for over a decade. In fact, since 2014, total investment to all oil and all natural gas globally, government, state company, private companies, doesn't matter, the total is down by about 2/3. And the non-Gulf OPEC countries are no exception. Places like Gabon and Nigeria and Venezuela are just borderline incompetent when it comes to maintaining their own energy infrastructure anyway. So they're completely dependent on internal investment, and yet they think they have checks that they need to write, so they don't provide the investors with particularly great terms. And so if you're those investors and cash is limited, you try to put your money elsewhere where it's going to be more productive with a more reliable partner. And that manifests as lower production in a lot of OPEC states to the tune of apparently 2.8 million barrels per day. Now, in the last few weeks, about a fresh million has come online, mostly from Libya and Nigeria, because a certain confluence of events have allowed them to increase output in the short term, but don't expect that to drop. Both of them are very close to record low outputs at the moment, and they'll probably be back within a few months. This is kind of how it shakes out with these folks. Anyway, bottom line is before you ascribe any sort of motivation to OPEC, the favorite one being that they're trying to stick it to Biden because Biden is green and hasn't been exactly kind to the Saudis. There might be something to that, but we're not there yet. Don't ever, in this line of work, listen to what people say. Watch what they do, especially when you're talking about folks in the Middle East where suicide bombs are often perceived as a legitimate form of political discourse. The rules are different over there, and we need to keep that in mind before we jump to any conclusions. So wait, watch. Let's see what the Saudis do over the course of the next few weeks with their actual oil exports. That'll tell us everything we need to know about what it is they're trying to actually achieve.
We always opted for making sure that we are attentive. And to be attentive, you have to be assertive and preemptive, and certainly ahead of the curve, which means you have to be proactive.
If you permit me, Royal Highness, we are not endangering the energy markets. We are providing security, stability to the energy markets.
At a price.
Everything has a price. Energy security has a price as well.
Our priority now is stabilizing market. Now, we could be accused of wanting to influence market in a negative way. That's everybody's prerogative. You and others will see how we conduct ourselves in the months to come. The most pivotal and more important thing for all of us in this table and others who have a huge amount of hydrocarbon resources is to make sure that we have a stable, sustainable, stable market that will not inhibit investment, that will not inhibit growth of demand, and we have to act in a responsible way to assure people that we are still remaining a responsible producers, that the world can rely on us.
And when it comes to OPEC, we've made clear our views to OPEC members. We have a multiplicity of interests with regard to Saudi Arabia, and I think the President laid those out during his trip. and they include everything from regional relationships, including improving relations between Arab countries and Israel, Yemen, where we're working very closely with Saudi Arabia to try to continue the truce, and a number of other issues, and those were all reflected in the visit. But we are working every single day to make sure, to the best of our ability, that, again, energy supply from wherever is actually meeting demand in order to ensure that energy is on the market and that prices are kept low.
Supply issues and international conflict.
World wars among big powers are quite possible to control dwindling oil supplies.
Just like it did in 1973, when an OPEC oil embargo led to an international shortage and rocked the global economy.
In the Dallas area today, dealers raised prices to more than 40 cents a gallon.
Yes, kids, that was a lot. But a federal government price cap kept the prices down, yet created a whole new set of problems, like rationing and an industry shutting down, unable to turn a profit.
But you will go up when you get the word.
Yes, sir, I definitely will.
Another idea to save gas: just drive slower.
And many Dallas motorists agree that it's going to take a decrease in speed in order to slow down the energy crisis.
The city of Dallas even considered regulating it.
City Manager George Schrader has urged the city council to reduce speed limits from 60 to 50 miles an hour.
It all sounds like a great plan.
We've had some interesting things going down in the Russian space over the course of the last couple of weeks. It now looks to be pretty certain that the Russians are not going to be able to pull any sort of fast victory here, and the war is going to be a long, grinding process, really, no matter who wins, which means that anything that is necessary to keep Russian oil flowing is going to be very problematic. So if it's east of the Urals in eastern Siberia, that is all stuff that's going to go to zero. The Russians do not have the technical expertise to operate the reservoirs, and it's just a question of whether this stuff goes offline in 3 months, 6 months, a year, 2 years, 3 years. We don't know. We've never had this sort of collapse of technical workers in an oil field, oil zone ever before, so we don't know how fast to expect it to go offline. But we know for sure that the Russians can't do it, and we know for sure that the Chinese can't do it. You go west of the Urals, and the picture is somewhat different. There, the Russians do have the technical skills to maintain most of the output. The problem is infrastructure. And if we have a significant interruption in the flows, then pressure will build back up to the wellhead. And in the permafrost, that means that the wells get damaged, and it can take decades to repair that. So based on what happens with sanctions and the war, that can go to zero too, but it's subject to a lot of things that will happen beyond Russia. So in the east, you know it's going to go offline. The question is the timing. In the west, it's probably going to go offline, but it's subject to things that have almost nothing to do with the war. Which brings us to Alberta. Now, Alberta has been producing crude for a few decades, and their crude is a little non-standard. It's mined. Either they have to run some electricity or some steam into a reservoir to melt it out, or they have to physically mine it. Either way, it's very heavy, very high in sulfur, very thick. It's very technically difficult to recover. And that means that Albertan crude has always been on the margins of the global market. Two big reasons in addition to the quality issue. One is infrastructure. All of the pipes that bring Albertan crude to market basically flow into the United States and end up in Texas. And Texas is already a super saturated market. So a lot of times Albertan crude sells into the market at a $30 a barrel discount, which is kind of what the Russian stuff is selling on the international market for right now. Second is cost. As you might think, mining something that for everyone else is a liquid is kind of expensive. And so Albertan crude traditionally has sold for, or has had a break-even price of around $90 or $100 a barrel. So you only get a lot of activity expanding in the Albertan oil space in times when energy prices are just through the roof.